Good morning and welcome to Market Cafe with me, Ankur Mishra and Kanishka Sarkar. In this show, we will tell you all the news that matters to you before opening of market. But let's get started with the news from United States. Kanishka, good morning. Finally, the tax bill is here.
Well, absolutely. The bill is here. But before we talk about the bill, let's also talk about how it actually impacted the stocks on Wall Street. If you look at S&P 500, it closed just below the flat line after the discussion was done. So did the 30 stock Dow. Both posted their third consecutive losing day amid elevated treasury yields that were weighing on sentiment. Now, the Nasdaq Composite, that was the only outlier, rising about 0.3%. Now, these moves come, like just you mentioned, at a time when the members of House of Representatives cleared U.S. President Donald Trump's sweeping tax bill, and it now goes to the Senate. Now, worries about the cost of the measure and its impact on the nation's debt and deficit sent long-term treasury yields higher to 5.16%. That's the highest level since October 2023. Now, these revived fears over the economy follow Moody's downgrade of the U.S. credit rating as well nearly a week ago. In fact, if you look at the weekly moves on Wall Street, all the three averages are heading for losses on the week, with the S&P 500 down nearly 2% through yesterday's close. The Dow is on pace for a decline of about 1.9%, whereas the Nasdaq, that is tracking a loss of 1.5% on a week-to-date basis.
Right. If you talk on commodities front, oil prices did see a fall, and the expectation was there that there will be some announcement which will be made for arresting the price fall which has been happening. But contrary to that, there are reports that 4,11,000 barrels per dollar cut might happen in the important meet which is happening next month. And more than that, even in the November, the expectation is that the output will be more than the demand, and hence you would see there was an impact of price both on WTI as well as the Brent crude. While the Brent crude remain around $64, WTI did close around $61. But more than that, you would also see the pressure persist on gold as well. There was a price fall which happened around 0.6% on the gold front, and 3,295 was the level where the gold actually closed.
Well, absolutely, that was crude. But before we get started on the US tax bill, let's quickly take a look at all the cues that we are going to be watching out. JSW Steel is going to report its Q4 numbers today. In terms of corporate action, we have JSW Steel, which is going to mull fundraising. Ashok Leyland board is expected to mull bonus issue, whereas Mahindra Life Spaces developers, that's going to trade ex-rights issue. Apart from that, Havells India, that's the shares are going to trade ex-dividend today. In terms of other events, we have the ECB chief economist Philip Lane, who's going to speak later in the day.
Right, and the biggest headline, which is the moot point why all the markets reacted, is the US tax bill. US President Donald Trump's big beautiful tax bill, as US House of Representatives gives it a green signal out of the chamber on a narrow vote. The passage of Bill A, a major victory for Republican leader who have spent nearly 2 months crafting it, and the past 2 days making it last-minute changes. Democrats likewise are vehemently opposing the proposed steep cuts to the social safety net in order to pay for some of the tax cuts. Trump promised on the campaign trail last year about this bill, and now he is delivering on that. In fact, experts have already analyzed the impact, where the bill is expected to cost as many as 8,30,000 jobs and drive up bills and pollution emissions. For instance, under the reconciliation bill, tax credits for cleaner cars will end this year, with incentives for wind, solar and even nuclear energy projects scaled down and then eliminated by 2032. Experts are going as far as to say that the said bill could not come at a worse time when the inflation fears have been peaking. We at ET Now have collated a comprehensive impact analysis from the bill, which is now with the US Senate. Let's go across to my colleague Varun for all those details.
Well, so definitely the House have actually passed the Donald Trump's big beautiful tax bill, and actually if you look, all Democrats and 2 Republicans oppose the bill. otherwise it was passed. Now the bill actually, if you look, it will now go to the Senate, wherein the further changes are expected. But yes, the bill has been passed in the US House. Loosening of the guns rules, imposing earlier work requirement for Medicaid, and limit the further state expansions, and also add resources to deport around 1 million of undocumented immigrants annually. Now, if you look some of the key other components of the bill, it actually cuts two major safety nets, that is Medicaid and also the food stamps, and also it makes 2017 Trump's tax cut permanent for all individuals. It actually, there are certain tax provisions in the bills, like temporarily they have removed taxes on tapes, overtimes and car loan interest, and also it includes a temporary boost in the overall standard deduction. The SALT, I mean the state and local tax deduction, the cap has been now raised to around $30,000 from around $10,000. Additionally, if you look on the spending side, there is $150 billion of defense spending that comes into the bill, and it will also fund Donald Trump's Golden Dome plan. It also has $70 billion for border enforcement. And if you look at the total impact of this, on the US debt, it could be actually very high, because experts say that it could add around $3.8 trillion to the overall federal government's $36.2 trillion in debt over the next decade. And actually, this bill looks to raise the overall debt ceiling by around $4 trillion to avoid a deficit. So yes, it is going to have an impact on the overall balance sheet of the Federal Bank, of the Federal Reserve, but definitely this bill has been now passed and it will go to the Senate, and actually it had an impact on the bond yields as well.
All right, thank you, Varun. Thank you so much for all those details on the US tax bill, which is now with the Senate. But let's move on and shift focus then. Finance ministers and central bank governors from the group of 7 democracies papered over their differences, pledging to address excessive imbalances in the global economy and saying they could increase sanctions on Russia. Now, the finance ministers and central bank governors said that there was a need for a common understanding of how non-market policies and practices undermine international security activity, economic security. Apart from that, the group also is considering increasing sanctions on Russia over the Ukraine conflict.
From G7, let's shift focus to Japan, where core inflation has accelerated to 3.5% in April, the highest in more than 2 years. The rise in prices bolstered by surging prices as the Bank of Japan considers pausing its rate hike posture to assess the impact of US tariffs. The core inflation figure was higher than expectations of 3.4%, marking it the highest level since January 2023.
Absolutely. Next up, we have latest from war-torn Gaza. Now, Israeli Prime Minister Netanyahu's office said he spoke with President Trump following the murder of 2 Israel embassy staffers in Washington. On that call, amid rumors of a growing schism between the leaders of Netanyahu's failure to end Israel's war on Gaza, US President Trump has reportedly backed Israel's war goals in the Palestinian enclave.
Right, with this, it's time to take a very quick break, but don't go away, because we'll tell you what is the impact on Asian market of the news flows. Welcome back after the break. You're watching Market Cafe with me, Ankur Mishra and Kanishka Sarkar. Let's shift focus to Asian markets, how they are performing. You can see Nikkei on your screen up 1%. There was an inflation data which was more than expectation of 3.5%, but there is also expectation now the BOJ will act on it, and hence you can see around 1% up on Nikkei. Similarly, Shanghai, there was a call which was made between the officials of US and China, so you can see flat to negative opening there. But even other Asian markets are performing well. You can see on your screen Hang Seng, which is flat to positive, around 48 points up with the start, and Kospi is the only market which is trading in the red currently. down more than 1%. But for Australians, ASX 200, it is also flat to positive start, but more than that, our Nifty implied open is indicating a mute to positive start, 32 points up there. So we can definitely expect that the rally which has been there in Indian markets could see some push from at least in the beginning today. Kanishka?
Well, absolutely. Let's see if we manage to cross that 24,700 level at any point in the day. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. Now let's get you some more news update. Now exchanges may soon have to align their weekly expiry days for derivatives trading, as the SEBI is all set to issue the final circular to reduce volatility. Ankur, what are you picking up from your sources on this front?
Yes, ET Now has been consistently reporting on this matter. As you would remember that NSE had earlier applied for a change in expiry from Thursday to Monday, after which SEBI came into action and stated that there can be only 2 expiry days. However, that was a draft circular whereby it was mentioned that Tuesday and Thursday can be expiry days. So on Tuesday most of the BSE FNO expiry happens, and on Thursday NSE FNO expiry happens. But now we understand through sources that NSE has applied for Tuesday being an expiry day, and that may be under consideration. However, the final details will only be known after SEBI actually releases the final circular where the application has been granted or not. We will come to know, meaning will there be a change in the expiry of 2 exchanges. But for now we understand that it was discussed in the secondary market advisory committee, and all the scenarios, if this change happens, what will be impact on BSE, what will be impact on NSE, all that study has already been happened. So the ball is in the court of regulator, and we may see the final details on the expiry change may be out very soon. But shifting focus to an important meeting which is happening today on dividend transfer, where we understand that Reserve Bank of India will decide on the surplus transfer this year. Remember, last year there was a record transfer of 2.1 lakh crore by government, by Reserve Bank of India to government, and the expectation this time is even more. The economists are penciling in somewhere between 2.5 to 3 lakh crore this year. In fact, some of the economists have also mentioned that it could be even more than rupees 3 lakh crore this year. But you should keep an eye on the buffer which this time Reserve Bank of India keeps. Last time it was kept at 6.5%. So all eyes will be there on the important meeting of Reserve Bank of India, and we may see the dividend announcement coming soon.
All right, all eyes on that RBI board meet expected today. But moving on, now India's Consumer Protection Authority, that may soon issue notices to other bike and cab aggregators on the feature of advanced tip that you might have been seeing on your apps. The CCPA has already sent a notice to Uber over its advanced tip feature and directed to respond within 15 days. Sameer is joining us with all those exclusive details.
It is not just Uber, but several other bike and cab aggregators are under the lens of CCPA. India's Consumer Protection Authority is likely to send the notice to these cab and bike aggregators over the feature of advanced tip. A similar notice has already been served to Uber on its advanced tip feature, and a detailed response has been sought from Uber within 15 days. Now, government understands that this feature of advanced tip, it is basically unethical and exploitative. Not just this, these features of advanced tip, it basically influences the consumer's choice, which is unethical. And based on these grounds, a similar notice has been served to Uber. But government has also seen that they are receiving complaints from the consumers on various platforms related to other such bike and cab aggregators where this advanced tip feature is present. And CCPA is likely to send this notice very soon to these aggregators which are using the feature of advanced tip. So if you see, Uber is not just the only player. This advanced tip feature has been rolled out on Uber's platform almost 4 or 5 months back, but there are other aggregators which are using this advanced tip feature since a long time, and now government is taking a close call, is now evaluating and inquiring that why this feature is there on their platform and why it should not be received, it should not be removed. In addition to this, we are also picking up from our sources that if a satisfactory answer or response will not be received from these aggregators, then a hefty penalty or a strict action might be taken up in coming days.
Thanks, Samir, for those details. Now, after Uber, let's shift focus to a major issue of parking. In a major move to tackle the growing parking and traffic issues in Mumbai and across MMR region, Maharashtra's Transport Minister Pratap Sarnaik has announced that new vehicles will not be registered without proof of allotted parking space. Buyers must furnish certificate from the local civic body confirming the parking allotment, and only then the car will be sold. My colleague Anurag Shah is actually joining in with more details on this story.
If you are planning to buy a new car in Mumbai or Mumbai metropolitan region, then dedicated parking space certificate will be required. According to Transport Minister of Maharashtra Pratap Sarnaik, government is planning to come up with a policy where parking certificate from civic authority will be required for the registration of four-wheeler because government, according to Transport Minister, traffic is increasing on roads of Mumbai and other cities of Maharashtra, and vehicles are parked on the roads, both the sides of the road, so which is creating issues. So Maharashtra government is planning a policy where after having a dedicated parking space only, the vehicles will be registered. So in this regard, government will make sure that developers will give a proper parking space for the houses, flats they are selling. Government will also come up with a public parking space also, and after the dedicated parking space certificate only, new vehicles will be registered. The same concept was started in a city of Chennai also, and now Maharashtra is also planning to have a parking certificate for registration of new vehicle to decongest the roads, to decongest the vehicles running on the roads.
All right, thank you, Anurag, for all those details. A parking space certificate is what people in Mumbai and the neighboring regions might need to park their vehicles. But now let's shift focus to some economic news. Now, the government has announced its roadmap for coal production in the current fiscal. The coal ministry is going to seek cabinet approval to establish a coal trading exchange. Now, Prakash is joining us with all the details.
The government has come out with the action plan for coal sector for FY26. That's an important development coming in. In fact, the coal ministry has set a coal production target of 1,150 million ton for FY26, out of which Coal India will be producing around 875 million ton of coal during current financial year. Some important development on coal trading exchange as well, where coal ministry is likely to seek cabinet approval for setting up a coal trading exchange across the country. That's an important development coming in. In fact, the inter-ministerial consultation is already underway. Further amendments will be made to the MMDR Act 1957 to implement this plan. When it comes to coal auction under commercial coal mining, target has been set to auction at least 25 coal mines during current financial year. In fact, India will also be commissioning one coking coal washery with 2 million ton capacity by the end of 2025. CIL and its subsidiaries have set capex target of rupees 22,778 crore for FY26, and coal demand projection will also be announced for FY26 to FY30 to facilitate better planning.
Thanks, Prakash, for those details. Now shift focus to Tata Motors because it has launched Tata Ultra's facelift starting at rupees 6.89 lakhs. This is first major update in Ultra's since January 2022. In an exclusive chat with ET Now, Shailesh Chandra, MD of Tata Motors PV and EV units, called the launch a key move to strengthen their presence in in the premium hatchback segment, where Tata has actually sold over 1 million units in 3 years. Let's listen to that conversation.
New Altroz has been able to bring out those aspects through its design, which is very striking, has different kind of elements, it has wider proportion, it has the flush door handles or very modern lighting, which makes it look very premium and stands out in the premium hatchback segment. Also, when you go to the interiors, you will see the color, material, finish, which makes it look very plush. At the same time, lot of first in class or best in class tech features, whether you talk about 360-degree camera view, whether you talk about the biggest screen, infotainment screen which has been given, or an digital instrument cluster which can also show you the map. So host of features which have been given. At the same time, the safety has been taken to the next level. Altroz, when it was launched in 2020, it was in any case the gold standard of safety with 5-star GNCAP rating. And we have further taken the safety to the next level by providing 6 airbags and ESP across all the variants. So I have spoken about the target group as well as why what we have done in the new Altroz, it connects with the aspirations of our target group.
All right, Shailesh, in fact, as you pointed out, do you plan on launching an Altroz EV anytime soon?
Yes, I think, we earlier had been showcasing Altroz EV in some of the auto expos. We had also said that maybe with the life cycle intervention, we would take that opportunity to bring an electric version. But we have been closely observing the evolution of EV industry. Earlier, we wanted to bring this in the 8 to 15 lakh kind of a price band, and it would have served this price band well with with Tiago and Punch, the other 2 electric vehicles being alongside that. But we have also seen that as the battery prices have come down, even the Nexon, the smaller battery pack, which is 30 kilowatt hour, has also come down below 15 lakhs. So we thought that right now there is no need for a 4th product in this price bracket, and therefore we have kind of postponed it. But in future, if there is a requirement that we see or a space for Altroz EV in future, we would be very open to bringing it.
All right, that's the latest word coming in from the Tata Motors management, which has launched facelift Altroz recently. But let's move on now to the sensex rejig that's expected today. Now, the sensex revision announcement is scheduled for today, and the flows are expected to commence from the latter half of June. Now, Ashesha joins us with the inclusions and exclusions, and she'll also tell us about the likely rebalancement that is on charts for the FTSE.
Well, yes, FTSE and Sensex rejig announcement is expected to come in later today, and IIFL Research has come out with a report on expected inflows and outflows on account of this rejig. So first up, let's talk about FTSE, where they are expecting about $131 million of inflow on account of this adjustment for Hyundai. For Vishal Mega Mart, about $75 million of inflow. For Swiggy, $60 million, followed by NTPC Green and Vari Energies at $50 and $44 million respectively. So that's as far as FTSE rejig is concerned, and 5 stocks where IIFL Research is expecting inflows on account of this adjustment. Apart from that, let's also talk about Sensex rejig, where IIFL Alternate over here says that they are expecting inflows for 2 stocks. One is Trent and one is BEL or Bharat Electronics. Inflows of $278 and $275 million respectively, followed by Nestle, which is expected to be removed from the index, which could lead to an outflow of about $210 million. And IndusInd Bank could also be removed, which could lead to an outflow of $135 million. So several stocks will be in focus. This, of course, is an estimate which IIFL Alternate has come out with, and these could be the possible inflows and outflows on account of Sensex and FTSE rejig, which is expected to be announced later today.
Thanks, Ashesha, for those details. But important thing to keep in mind that these are just announcement. The impact will happen from June. With this, it's time to take a quick break, but don't go away. We'll come up with more stocks which should be on your radar.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. And it's time to take a look at some earnings now. Now, pharma major, Sun Pharma, that one reported a mixed show in the March quarter with profits and revenues missing estimates, but margins spotting a resilient 340 basis point surge. Now, what is it that aided this show in the quarter gone by, and what lies ahead? For that, we have Varun joining us to break it down.
Well, it has been a mixed quarter for Sun Pharma, wherein the revenues are below estimate. It has come at around 12,959 crores. We were expecting 13,100 crores, but if you look at the margins, they have come at around 28.7%. Now, this has been the 4 consecutive quarter where the company has, generated margins more than 28%, and we were expecting the margins to come at around 27.7%. So, it's been a good operational beat for Sun Pharma. But if you look at the profit, that has declined by around 19%, and they have come at around 2,150 crores. We were expecting 2,830 crores. Now, if you look, the overall exceptional losses have increased for the company, and also the overall tax expenses have increased for the company, and that's the reason we have seen a 19% decline in overall profitability for the company. Now, the Indian formulation business, that has done good. There is a growth of 13.6%. We are expecting 10 to 13% growth. Also, the global specialty sales, they were good this quarter, a growth of around 8.6%. But if you look at the rest of the world, the overall growth was only 2%. And also the US formulation sales, they were down 2.5%. We were expecting $485 to $500 million. It has come at around $464 million. The R&D spends, there has been an increase of around 1%, and this is as what we were expecting. Now, if you look, the company has said that going forward, specialty would become an increasing important part of the overall company's business, and the company is expecting around $100 million of additional spend for commercialization of new specialty products. Also, for FY26, the overall guidance of the company is mid to high single digit top line growth, and it is lower than the previous growth, and this is because of higher global uncertainty, and the R&D expense, they are going to be in the range of 6 to 8%. So, if you look at the overall results, they are mixed. Revenues, profit is a miss, but yes, EBITDA margins have been good. The Indian business has done good, but yes, the US business has been a drag.
Thanks, Varun, for those details. Now, let's go across to Gaurav, who is standing by to give you an update. Which are the stocks which are in news?
Well, yes. Today, let's focus on JSW Steel, Ashok Leyland and Mahindra Lifespace, and the reason being that JSW Steel, there will be a meeting where company will discuss fundraising. Ashok Leyland will have a meeting today where they will consider a bonus issue, and lastly, let's also not forget Mahindra Lifespace. Today, the company will trade as X rights issue of 1:8 ratio. Other than that, Hindustan Copper is also in focus today because board meeting is going to happen on 27th of May. Prestige Estate, the board meeting is going to happen on 29th of May, and Equitas, where board meeting will happen on 30th May to consider fundraising. Other than that, Tata Steel will be in focus today because company has now inaugurated their new expansion project, which will be situated in Odisha. With this, they will be expanding their capacity almost by 3 to 8 million tons with an investment of around 27,000 crore rupees. Ultratech Cement is also in focus today because India Cement, which is one of its subsidiary, has now executed a debottlenecking strategy in Rajasthan. With this, they will also expand their capacity almost by 0.3 MTPA. Indus Towers is also in focus today because company is going to acquire 26% of JSW's Green Energy 8 project for a cost of around 36 crore rupees. Now, this will be used as a captive project. Lastly, let's also focus on some of the companies which will be in focus on the back of the earnings. So, first, let's talk about Honasa Consumers. A good set of numbers is what we saw. On the other hand, we saw ITC reported inline set of numbers. And lastly, let's also focus on Concor, Ramco Cement, where we saw weak set of numbers in this quarter. So, definitely watching out on all these counters on the back of the news flow as well as numbers that we have received today.
With this, let's also shift focus to hospitality and major ITC, where the company has delivered in-line set of numbers in Q4. You would have seen that the profits jumped multifold, and this time the profit remained at the cigarette section. If you talk, the revenue is up 6%, 8,400 crore. FMCG sector, 5.1% revenues up at 13,894 crore. Agri sector, 3,649 crore, which is up 17% this time, and paperboards segment 5.5% up at 2,188 crore. If you look at the key highlights, the hotels post higher ever revenues this time, the operating profit, and also in the FMCG segment, Sunfeed biscuits continue to strengthen the portfolio, while if you talk about the cigarette segment, the growth largely is volume driven this time. So all in all, mixed set of numbers are coming in from ITC.
That's right. That's the result coming in from ITC. But now let's take a look at what is expected from JSW Steel. That is going to report its numbers today, and it's expected to be a good set, which is expected to be aided by lower coking coal prices, volume growth, improved cost efficiencies as well. Now, Ashesha is here to tell us what the street is penciling in.
Well, yes, we are expecting strong set of numbers on a sequential basis for JSW Steel this time around. Revenue is expected to see an uptick of about 5% on a sequential basis, led by volume growth. So strong volume growth coupled with lower coking coal costs in the quarter gone by and operational efficiency will aid numbers for JSW Steel in the fourth quarter. EBITDA is expected to see an uptick of a solid 15% on a sequential basis, led by lower coking coal costs. Remember, iron ore prices rose a tad bit in the quarter gone by, so that could negatively impact the numbers, but all in all, strong set of numbers are expected. As far as standalone EBITDA per ton is concerned, that could come in at about 8,800 rupees per ton, which will be an uptick of a solid 12% on the sequential basis. But management commentary on outlook going forward, especially when it comes to volume growth, when it comes to pricing, will be crucial this time around. Capex and debt plans of the company will also be crucial. And remember, safeguard duty was imposed by the government at the rate of 12% on steel products in the quarter gone by. So any management commentary that comes in on safeguard duty and its impact on the steel industry will also be very crucial. But all in all, we are expecting strong set of numbers from JSW Steel. Revenue growth of 5% sequentially. Margins are expected to expand, and EBITDA per ton is expected to come in at a solid 8,800 rupees per ton, up 12% sequentially.
Thank you, Ashesha, for getting us all those details on what to expect from JSW Steel numbers. But let's shift focus then. Now, SME IPO rush seems to be back in the market, with 4 companies slated to launch their public issues next week. But should investors subscribe or be aware of the risks involved? Sharad is joining us with all those details.
As per the RHP analysis, there are certain concerns which have come regarding these companies in the SME IPO space. The first one is Blue Water Logistics, and the merchant banker is Smart Horizon Capital Advisors. Few concerns coming in, especially with a higher revenue concentration coming in for ocean freight services, and also the industry is volatile, seeing the current global macroeconomic scenario. The promoter entities are also engaged in the same line of business, and interestingly, the outstanding trade receivables that has jumped 70% on a year-on-year basis, coming in at 45 crores for FY25. Interestingly, the debt to equity ratio is also not favorable, coming in at 1.82 times. The second company in focus is Estonia Labs. The banker is OneView Corporate Advisors. Few concerns coming in, especially on the US FDA approval, which has not yet been received for the OTC drugs, and there is a delayed and non-filing of statutory payments as per ROC. Lesser margins also, because largely it's a trading business. 90% of the revenue comes from this segment, and a very high level of inventory is what the company has stated in its RHP. A weaker margin profile also if you do a peer analysis with the company called Beta Drugs. Also, there is a certain positive also that there is an expansion in US only if the approval comes from the US FDA. The third company is Nikita Papers. Banker is Fast Track FinSec. Largely, it's operating in a cyclical industry. The company manufactures kraft paper, and interestingly, the global kraft pulp prices, they are on a lower downtrend. Volatility is there in the raw material cost. Negative operating cash flows is something which the companies are currently operating on, and there has been a revenue degrowth over the last 2 years as well. Very high debt of almost 159 crore rupees as per the RHP for the month of December in 2024. The fourth company is Neptune Petrochemicals. The banker is Beeline Capital Advisors. The concerns include a long gestation period industry, which is the construction and the infra activities, and the upcoming monsoon season. That is where the seasonality kicks in, and this remains negative for the company as well. The valuations for this IPO, they are also expensive, and 84% of the revenue just comes from trading of this bitumen related goods. So these are the 4 important SME IPOs where the concerns are being flagged off by us.
Thanks, Sharad, for those details and giving an update how one should navigate in those four SME IPOs. With this, it's a time to take some words of wisdom from Vikas Khemani, founder Carnelian Asset Management, who shares a list of sectors he's positive on. Let's listen into this conversation.
All these three things about US economy you've been talking about, have not surfaced with the rating downgrade. It's been around for more than, 1.5, 2 years, I know. I mean, US debt, deficit, or for that matter, in delinquency in their credit card has been around for 2 years. So I think, very often we tend to call these, situation, but nobody, fact of the matter is nobody knows what time US economy will get into recession, what kind of it will peak out. So I think, and generally speaking, IT sector, in my opinion, is not, I mean, we've seen IT sector has been reasonably all right, growing well in last 3, 4 years. And these kind of intermittent cycles come in any sort of industry. We are not very negative on IT sector. We've been saying for quite some time and continue to remain positive, because IT is not only necessarily linked to economic growth, because a lot of digital transformation has to happen, the cost rationalization has to happen, and IT is a key enabler of that. So I think there are many more levers other than only the economic growth. A lot of times companies have to spend money in order to just survive, forget about grow. So I think and some of the sectors which are in the manufacturing front, where India is exposed, not much exposed to US, there India tends to benefit from the market share gain, which is happening because of China plus shift. And that, I think, can compensate for if economy slows down. Currently, there's no such sign, but if that slows down, and market share gain can compensate for that. So I don't see US economy slowing down as a major risk to Indian economic growth. Market sentiments can go up and down depending on how the news flow comes, but I don't see major economic risk if US were to slow down to India.
So that brings me to the follow-up question. You did say that there are a lot of other manufacturing themes also that one can watch out for, given the fact that you will have the China plus one strategy also at play that could benefit some of them. So which are some of those sectors that one should watch out for very closely, given the fact that we are actually trying to get some sort of strength back home in those sectors?
Sector broadly remains same. We've been quite positive on banking and financial services. We've been positive on manufacturing. We've been positive on the entire pharmaceutical space. So in general, I think, we've been very positive on the spaces which are aligned to Indian economy. And generally, that's what is kind of happening. So sectors and economy really don't change very often, because India is in a very structural transformative growth cycle. And this is going to last for long. So the only thing is that which will grow faster. So at this point in time, we are significantly overweight in banking and manufacturing, I said. And, and there are sort of sectors within consumption you pick up. There are, stocks within the consumption you pick up. There are stocks, excuse me, in the IT sector, in the mid and small cap space, which are doing well. So I think, it boils down to, so these are some of the sort of areas of exposure that we do have.
All right. Hi, Vikas. Good morning. Shrishti this side. And Vikas, I think that after your visit to Omaha, where you did visit the Berkshire Hathaway shareholder meeting, we are connecting now on the channel. Give us some sense that what has been the major key takeaway, because this shareholder meeting was indeed a special one, because from next year on, you might not see Warren Buffett taking the center stage.
I don't know that whether next year he will be there or not. He's still chairman. So you will learn a lot from the legend, and we all know that he's a legend. So, and I think all the learnings are definitely around. He's been very, very big believer of long-term investing, compounding, associating with which stands out with associating with good quality people, whether it is, as an employer or whether it is a partner. I think that he has been espousing for a very, very long time. So I think quality of people you associate with is a very, very important. It stands out in every interaction. So there are lots of, takeaways one can take from when you meet, Raikal of Omaha. He's a legend, right? And plus how, disciplined he could be, even if despite having so much cash on the books, how he's been and how he's transitioning to the next level of leadership. The moment he realized that he's kind of slowing down in his decision making, he's very happily to kind of letting it go. So these are some of the quality you admire him as a person, you admire him as an investor, you admire him as a leader. So there are lots to learn. I mean, one can probably do an hour show on that.
Certainly.
All right, that's the expert view coming in on how to navigate the current markets. But let's move on and take a look at some more news updates. Now, in a latest move, the Trump administration has barred Harvard's ability to enroll international students, and the administration also added that it would be doing so as an ongoing investigation into the university by the Department of Homeland Security. Days after moving, Delhi High Court Turkish firm Selby's subsidiary has approached the Bombay High Court challenging the revocation of its security clearance and the termination of its ground handling contract at the Mumbai airport. With an aim to highlight Northeast region as a land of opportunity, attracting global and domestic investment and bringing together key stakeholders, investors and policymakers on a single platform, Prime Minister Narendra Modi will inaugurate the Rising Northeast Investors Summit today. Now, Maharashtra has reported 165 COVID-19 cases since January, with 148 from Mumbai. Currently, 33 cases were recorded in cities including Mumbai, Pune and Thane. Now, 2 deaths involved patients with comorbidities. Meanwhile, authorities have urged the public not to panic as similar trends are being seen nationwide and globally.
Next up is an unusual news. Kashmir witnessed an intense spell of heat on, with Srinagar city recording unusually high maximum temperature on Thursday. According to Met Department, Srinagar recorded a maximum temperature of 34 degrees Celsius, marking it as the 3rd highest temperature ever recorded in the month of May. After day before yesterday's hailstorm, dust storm and rain in Delhi NCR, IMD predicts that thunderstorms and light rain may continue over the next 2 days. Meanwhile, an orange alert has been issued for Mumbai for today and tomorrow. And shifting focus to IPL, Royal Challengers Bengaluru is all set to lock horns with Sunrisers Hyderabad today in Lucknow. RCB had already booked its place in IPL playoffs, but it would want to walk away with this match with a win and cement their contendership for top 2 finish, which gives an advantage. On the other hand, Sunrisers Hyderabad, who got eliminated from playoff race, will want to end their IPL journey on a high note by winning the remaining game. With this, it's time for a wrap in this edition of Market Cafe. On behalf of Kanishka, me and entire Now team, thank you for watching. But do tune into Market Cafe. Do tune into The Market, which is the next show coming up next.